So Tesla stock's not looking too good to start off the week. We have Bob Iger back at Disney. We're going to be breaking these two topics down in this video. And of course, we have some other stocks to talk about, charts to break down, the markets in general to talk about as well. So sit back, relax, take a sip of your coffee, hit that like button. Let's try and get at least, 100 likes on this video. Can we do that? Hit that like button, subscribe, and let's dive into the video. So right now, what time is it? About 1 p.m. on the East Coast, and the markets all across the board are selling off. We have the Nasdaq 100 down 1.3%, Russell's down 0.75%, as the S&P's down 0.5%, and the Dow, believe it or not, is not down that much. It's only down 0.2%, and mind you, the VIX is also down 0.5%. We have gold down, silver's down. Literally everything is selling off, and last I checked, let me see, Bitcoin here and Ethereum, pretty much the entire crypto market was selling off as well. Let's see, yada, 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 yada. Come on, where is this now? Let's go, guys. But yeah, pretty much red all across the board. Coinbase wants me to upload an ID. What the heck is this thing talking about? Come on. Let's see. Bitcoin down 3.3%. There we go. Ethereum's down 5%. Oh, man, that's rough. Let's see. Dogecoin is down about 8%, back in the mid 7-cent range. So, yeah, everything is in the red right now. And the markets, looking at SPY, they're not completely breaking trend yet. But it's clear to me that we're in a wedge, clear as day, right? You can see lower highs, higher lows being made on this 20-day 1-hour chart, and you can see the same thing here on Triple Q, which tracks the Nasdaq 100. Higher lows and lower highs are being made. And one thing worth mentioning here on Triple Q is look at what we just did. This is not good for the bulls. I mean, this just took the lows out, it looks like, from last week, or we're right at the lows. Let me see here on the 5-day. No, we're right at the lows from last week. So this is going to be a very pivotal point for the bulls in the short term. You can see we're right at 280 right now. That was not the low from Friday, but it was the low from Thursday. So if we fail at 280, we break the wedge on this 20-day chart on Triple Q, man, the tides could be turning very quickly from there, and we could be going down to about 272, maybe 275 after that. So keep that in mind. 280 on Triple Q is a very big point. I'm going to set my alert. Let's do that now. Mark is at or below $280 a share. And let's go back to SPY and see if this is near the lows from Thursday, Friday. Let me see here on the 5-day, 5-minute on SPY. Where are we now? Yeah. We're actually at the lows right now from Friday, about 393. It looks like we are holding. If that point does break, though, we might be going down to 390. Then if 390 is able to break, I mean, the wedge could be breaking on the 20-day chart to the point where SPY could be coming down to, those points here from, this will probably, in my opinion, be where it goes. If it were to break 390, guys, I think it'd fill the gap to 385 initially. Then from there, of course, we'll see where it could go. Maybe 382. I mean, we'll see. Time will tell, guys. So that's a quick little breakdown on what's going on right now at about 1 p.m. Everything across the board, from crypto, metals, the stock market here in the U.S., everything is red. So let's talk a little bit now about the stock, the stock market in terms of what's going on, some news, investing news, stocks I'm looking at, all that good stuff. So Tesla is not looking good right now. It's continuing the sell-off. Let's pull that up. Tesla is down 6%. It's not just a 1-2% red day like the overall stock market. No, it is down over 6% right now. It is getting hit, and I'm not sure if you guys saw, but we had another recall. Tesla had 21,000 vehicles. I think we got this announcement on Saturday. These vehicles were, recalled over a software issue that caused the taillights on some of the cars to not work properly. And the automaker, if I could even talk today, guys, the automaker announced the action on Saturday in a National Highway Traffic and Society Administration filing, yada, yada, yada. The recall covers 2023 Model 3 and 2020 to 2023 Model Y vehicles manufactured for U.S. customers. So, again, let me say that one more time. 2023 Model 3s and 2020 to 2023 Model Y vehicles manufactured for U.S. customers. So if that's you, you probably already know that. But if you didn't know that and you have one of those vehicles, now you know. You got to go check into that. Please go do that. So, yeah, Tesla stock, that is probably the main catalyst here. I mean, I'm sure It's not the only thing. It was probably going to sell off anyway. I mean, the technical picture here is not good. We've covered that before on the channel, and the fact that we have a red day overall in the stock market, that's got to be fueling the selling in Tesla. So if we just look at the chart, I mean, now we're at $170. Guys, I mean, this is what we talked about. You know, I told you time and time again. I've made shorts on here about this. I've made videos, long-form content on YouTube. I've talked about this on TikTok. Make sure to go follow me on TikTok, by the way, at Stosserfest, and on Twitter at Stosserfest. Getting more active on Twitter, guys, now that Elon owns it. Got to get more active on it because it's probably not going to be, I'm not saying the best social platform, but it's going to be now a competitor, in my opinion, for the top spot again. We'll see. We'll see if he's able to turn it around. But, yeah. I've been saying this all over the place, how Tesla, if it were to go under 200 and then 180, it was going to start falling very quickly. The technical picture would deteriorate even quicker at that point. And you can see that kind of happening right now. If we pull up the 3-year chart, the head and shoulders that I had drawn out is playing out. You know, I mentioned to you all time and time again that the 180 SMA here on this 3-year chart is big, a big level of support. Now we've broken that. If I zoom in a bit, you can see we broke under 175, clearly under 180, and we also held back in February of 2021 all throughout. When was this? May of 21, so a good 3-4 month stretch. We held about 180, 185, 175. Now we broke that as well. So this, to me, looks like we're going initially to about 150, 155 in the short term. That's where we were back in August of 2020, heading into the early days. Not even actually. It was from August of 2020 throughout November of 2020. That's where Tesla kind of was peaking out at about 155. And obviously this is with splits. There's been many splits since that point, but split adjusted, right? 155 is where it peaked out at back at that time. So that would be the next gap to fill on the downside. So guys, to me, Tesla, I'm not saying it's going to go bankrupt or anything like that. I don't think it will. I think it'll survive this recession and do well. But, in the short term, man, these charts, these technicals do not look good. I think there's more downside. And I've been saying that, and I'm going to continue saying that until I see something different. And, of course, at that point, I'll update you guys as always. So make sure to subscribe. And if you haven't gotten your free money from Moomoo yet, you get a $10 cash coupon plus up to 15 stocks, each up to $2,000. Just use my link down below, deposit at least $100. And you could also get 12 stocks from Webull with any amount deposited. All of those are linked down below. And just know, guys, those links help out the channel. I appreciate you all as always. And now let's talk about Disney, Bob Iger. What is going on? So Disney stock, first of all, is up 5.5%, which, if Bob Chapek, if I was Bob Chapek, I'd be like, dang, man, I was CEO. I've resigned or whatever. I'm not CEO anymore, and the stock's up. That's kind of like a slap in the face. But in reality, guys, I mean, at the end of the day, Bob Iger is who Disney shareholders want, myself included. Bob Iger was the CEO from 2005 to 2020, and I think he wanted to, end his career as CEO earlier than that, but he, it's got stretched to 2020, and then Chapek came in, and no joke, guys, since Chapek became CEO, Disney stock has been getting decimated. I mean, I don't know if you knew this. Let me show you this. But back in May, I think, of 2021, way before the overall stock market started to fall, right? That was at the end of 2021, early this year. That's when the bear market really started to happen, right? Well, guess what? Disney's bear market started way before that. And guess when Bob Chapek became CEO? Right, I believe, in the middle of 2020. So, okay, he became CEO during the pandemic. It ran up a little bit, it ran up a good amount actually to all-time highs, but that was the all-time high for Disney was hit in February, late February, early March, it looks like here, of 21. So that really is when Disney peaked out. Bob Chapek was CEO, right? And then from that, March month, all throughout the rest of the year, bear market was really kicking in on Disney stock before the actual bear market and the overall stock market started. So this thing went from 200, and when the overall bear market for SPY started, right, which was when, the beginning of this year, let's say, Disney was at $150. So Disney has already fallen 25-30% at this point when SPY's bear market started. So Disney was already in a rut. Then the bear market kicked in. Then things got way worse. Obviously, we went from 150 when the bear market and SPY started. Then this thing got all the way to 85. It pretty much cut in half. Well, not completely, but, pretty dang close, right? So, I mean, there needed to be something, and this is what the change is here to do. Disney in general, the internal, the numbers, if we look through the financial statements, which we're not going to do right now, there's a lot that is not looking too pretty right now. Let's just put it that way. There's a lot of debt. There's not that much cash. The streaming business is becoming more competitive. We should probably do a deep dive video into the numbers here, but overall, guys, listen, Disney needed to see a turnaround. I'm not saying they were gonna go bankrupt or anything like that. There's no chance it was gonna go bankrupt. But it was getting hit in this bear market, and who's to know if Chapek was still CEO, right? And he was for the entirety of the bear market, the recession. Who's to know how low the stock could go? I mean, especially if we got to we got into a horrible recession where unemployment actually started spiking up. We had people spending less on non-necessities. Who's to know how Bob Chapek could have got out of that? I think Iger brings way more confidence to the Disney shareholder through tough times because he lived through it. I mean, he was the CEO, like I said, from 2005 to 2020. And do you not remember 2008? That was a time period of pain for Disney. And guess what? They made it through. You can see here back in 2007, Disney was at, and another weird thing, when I was looking at this earlier, this is kind of freaky. We'll talk about this, then we'll move on. Disney stock in 2007 was at $37 a share roughly. Then it got down to about 15 at the bottom of the bear market, right? That was a drop of 58%. Remember that, 58%. Now, let me show you Disney right now in this in this bear market we're in. Disney hit $203 and it went all the way down to, let me show you this. It went all the way down to $85. Guess how much of a drop that is, guys? 58%. Unbelievable. I don't know. Is that a coincidence? I mean, what do you guys think? I'm not saying for sure that means it's the bottom here, but it's kind of weird. And from that point, it's ran up a good chunk, and now Iger's back. Let's see how this goes, how this moves forward. And of course, I mean, the 58% thing is just kind of weird. I mean, I'm not like one of these guys that's like, oh, that means it's the bottom. We have to load up. Of course, it could go under that. It could go down way more. But that's just kind of weird. And I just figured to point it out in the video. So I think Iger coming back is great. Investors love it. But the reality is the stock is still in a downtrend internally. The business is not looking the best, which we'll probably make a video on that. So make sure to subscribe. And, this needs more, it needs more momentum for me to look at this as a short-term trade. Forget about the long-term. Short-term trade, we need to get momentum out of 100, 105, 110, which I'm not too convinced that this Bob Iger catalyst is going to get us out of there. This could maybe fizzle out over the next couple of days, maybe just after today, for all we know. So keep that in mind, guys. And some more stocks here. Let's see how long we're in here. About 13 minutes. Oh, my gosh. I'm rambling. So let's see what else. We have Nucor. That's one that you guys got to watch. Nucor starting to break out. It's up 5% right now. I called this out earlier on my Patreon. Make sure to go check the Patreon out, guys, if you want. That's linked down below. This is one that I think is, from 145, which is where we call the breakout. Now it's at 148. I think we could go way higher, to be honest. 160, 165 initially. From that point, we'll probably be overbought. But, if that were to break, maybe back towards the highs, we could be going towards the highs from the end of April, 175.80. So Nucor looks pretty good. Watch out for this. It's really starting to, build up some momentum here. And NVIDIA, let's pull up NVIDIA. This is one that is currently down on the day, but it went from a point of being way overbought a couple days ago. Now it's at a point where it's like, all right, it's down about 12% in the past couple of days. RSI has come down a considerable amount. The trend is still holding clear as day. Let's see if we get some buyers here at 150, 53, 55, and see some sort of some upwards price action, where if this were to get above, let's say, on the 5-day chart, 155, 158, that is where this could start taking off again. But to be honest, we're not there yet. So for that reason, we have to be mindful of that and, don't jump the gun. I'm going to set my alert at about, let's say, 100. I'll put it at 160 for now, and we'll see what it does from that point. So I'm going to wrap the video up right here. If you guys enjoyed it, you know what to do. Hit that like button, subscribe, check out the Patreon, get all your free stocks. Those are linked down below. And with that being said, guys, cheers. And by the way, make sure to subscribe to my second channel. Cheers. I'll see you in the next video. Peace out.